Hi everybody, this is Eric here with the John Miller Real Estate team with Westboro Keller Williams, and today I want to go over why my wife and I, who just purchased the home, decided to go with the 5-year ARM adjustable rate as opposed to a 30-year fixed. Okay, try to stick with me. I'm going to try and make this as simple as possible. The first option we had on a mortgage was a 30-year fixed at a 5%. And real quickly, let me go through what that would mean for us over the next 5 years. Okay, at a 5% 30-year fixed, we finance $216,000. Our payment is on the mortgage alone is $1,159. In 5 years, we will pay $69,540 in mortgage payments. We will owe $198,350, and we will have paid the home down $17,650 had we gone with the 30-year fixed rate at a 5%. We decided not to do that. Instead, what we decided upon was a 5-year ARM at 3.5%. And let me explain to you exactly what that means. The rate is going to be 3.5% definitely for the next 5 years. After that 5th year, it could go as high as 4.5%. So in the 6th year, the most it could adjust up is 1%, and in year 7, a 5.5% is the max. So for the first 6 years, we're definitely below the 30-year fixed rate. And in year 7, there is the potential that we're only a 0.5% higher, okay? But let's focus on over the next 5 years how much money we can save. And at the end, I'll tell you why in our situation it made sense for the 5-year ARM. So at a 3.5%, again financing $216,000, the payment is $970 as opposed to $1,159. That's $189 less per month money out of our pockets for the payment. Okay, over a 5-year span, we would pay $58,200. That's $11,340 less out of our pockets in payments. In addition to that, we would owe $193,754, which on a 30-year program, because it's a higher rate, you're paying less principal. You're paying the home down less on your payments. You're actually going to owe $4,604 less with a 3.5% in 5 years. Okay, so your total savings, because you've paid down your home by $4,604 more, and because you've paid $11,340 less in payments, is over $15,000. It's almost $16,000 in a 5-year span. And per year, that's over $3,000, and per month, that's over $260, or it is exactly $265 saved. Okay. Now, for my wife and I, we were unable to pay 20% down. We didn't have $50,000 around in the bank. I wish we did, but we did not. So we do have principal mortgage insurance on our payment that's on top of this mortgage payment here. Okay, and the reason that we have PMI is because when you finance a home and you are unable to put 20% down, so you're putting less than 20% down, you're paying the bank a monthly amount that they need to secure the property in case you're unable to make payments to get their money back. So our hope is that we can eliminate that principal mortgage insurance by year 5. If year 6 or year 7 we're able to do it by then, that would be fine too. And I feel confident that we will be able to do that in this market, because if you look at the worst case scenario, for us to be upside down in the home in 7 years, the market would have to go down an additional 18% from the day that we bought it, which in 7 years, I really don't think that the market's going to be going down. If anything bought today, I feel very strongly will increase in value. In fact, for us to have 20% in equity within a 5-year period, all we need is for the market to go 8% up, and we will owe $193,000, and the home will be worth about $240,000. And at that point, we owe 80% of what it's worth, and we could finance into a 30-year fixed at that point and eliminate our $150 a month payment to the principal mortgage insurance. There are a lot of different loan options out there, and depending on your situation, will depend on what the right decision is. We pride ourselves on recommending the best possible mortgage program and loan officer to our clients, and that is the first step that you want to take when you're thinking about purchasing a property. There's some great 100% financing programs that are available that you have to go through a class to get approved, and you can even potentially qualify for rates a full percent below where the market's at right now with no PMI. That's a great program. If you do not qualify for that program, there also are other great programs available with very small amounts down, as little as 3 or 3.5% down. So feel free to give me a call. We're happy to point you in the right direction based on your individual needs and situation. Again, it's Eric here with the John Miller Real Estate Team. And keep in mind that if we are not in your local real estate market, Keller Williams is ranked one of the best companies in the industry, and we have agents all over the country that can help you out. And feel free to give us a call with any help you need with any real estate related matters. Have a good one.